If you had $50,000 today, would you buy a rental property or invest it in the stock market? For decades, people have argued about which investment creates more wealth. Some swear by real estate. Others believe index funds are unbeatable. But instead of opinions, let's compare the numbers. Meet Alex and Ethan. They're both 30 years old. They both earn the same salary. They both save the same amount of money every month. And they both start with exactly $50,000. The only difference: Alex buys a rental property. Ethan invests everything into a low-cost S&P 500 index fund. For the next 20 years, we'll follow both of them, including every major expense, every investment return, every setback, and every advantage. By the end of this video, you'll know which investment actually builds more wealth.
Alex decides to buy a small rental property. The house costs $300,000. He uses his $50,000 as the down payment. The rest is covered by a mortgage. Every month, his tenants pay rent. But owning property isn't as simple as collecting rent. He has mortgage payments, property taxes, insurance, maintenance, unexpected repairs, and sometimes the property sits empty with no tenant at all. Still, over time, the home's value slowly increases. The rent also rises, and each mortgage payment builds more ownership in the property. Real estate grows slowly, but leverage allows Alex to control a much larger asset than his original investment.
Meanwhile, Ethan takes a completely different path. Instead of buying property, he invests his entire $50,000 into a low-cost S&P 500 index fund. He doesn't need tenants. He doesn't repair roofs. He doesn't answer midnight phone calls. Every month, he continues investing part of his salary. His investments grow through compound interest. Whenever companies earn profits, some pay dividends. And over time, the value of the stock market has historically increased. Of course, the market doesn't move in a straight line. Some years it rises sharply. Other years it falls. But Ethan keeps investing, ignoring short-term fear and focusing on the long term. That's the power of consistency. After 10 years, Alex's property is worth much more than when he bought it. His rent has increased, his mortgage balance has fallen, and his equity continues growing. But he's also spent thousands of dollars on repairs, insurance, property taxes, and maintenance. Some years were excellent, others were expensive. Meanwhile, Ethan's investment portfolio has experienced several market crashes. But because he never stopped investing, every downturn became another buying opportunity. His portfolio continued compounding, quietly, year after year. 20 years later, it's finally time to compare the results. Alex owns a valuable property. He receives rental income every month, and much of his mortgage has been paid off. Ethan owns a large investment portfolio. His money has grown through compound returns, dividend reinvestment, and decades of consistent investing. Who has the higher net worth? The answer depends on several important factors: property prices, stock market performance, interest rates, location, taxes, and how consistently each investor followed their plan. Leverage, monthly cash flow, and a physical asset. But it also requires time, responsibility, and unexpected expenses. Stocks offer diversification,
liquidity, and passive long-term growth. But investors must stay calm during market crashes. Neither investment is perfect. Both have strengths. Both have risks. The smartest investors understand this. They don't ask, which one is always better? They ask, which one fits my goals?
Many wealthy people don't choose only one. They own real estate and stocks. They build multiple sources of wealth instead of relying on a single investment. Because true financial freedom comes from diversification, patience, and making smart decisions consistently. The best investment isn't the one that makes the fastest money. It's the one you can stick with for decades. So, if you had $50,000 today, which would you choose? Real estate or stocks? Let us know your answer in the comments below. If you enjoyed this comparison, subscribe to AKASH Wealth. Every week, we explain money, investing, business, and wealth in the simplest way possible. Thanks for watching, and we'll see you in the next video.